What's up, YouTube? It's your boy Khaled. We are back, and guess what? I ain't got no more clothes. So today what we're going to be talking about is SMA lines and EMA lines. So now on this chart, we're going to stick with BNGO because I think this was the last thing that we touched base on with the previous video. You're going to see three different lines that I got drawn over here. Now I got the 20-day EMA, I've got the 50-day, and I've got the 200-day. These are the most common SMA lines or EMA lines that you are going to come across. But you can actually change them yourself. If you want it to be a 9-day or an 8-day or a 10-day, whatever you want, you can add them, you can play with them. I'm just most comfortable with the 20-day, the 50-day, and the 200-day moving averages. Oh yeah, and just in case you were curious about what they meant, SMA is a simple moving average, EMA is an exponential moving average. I'm not that smart, so I cannot break it down even further for you. All right, now let's look at it on let's start off with a minute chart, because I know a lot of people want to do, day trading, right? Get in, get out. Now, whenever I'm day trading, which obviously I do that daily, but the only time I actually like to buy in, I mean, there could be a lot of news catalysts. Those are great, buy the hype, sell the news. So if you hear about something or you read something in the news articles that's going to tell you that, hey, you know what, something's about to push up, then hey, go for it. For me, I still like to trust the lines. It's worked for me so far, so I stick with it. Now, on a minute chart, if you look at something like this, it's obviously this thing just tanked here. Well, your lines ain't gonna help you. But if you see something that's gradual like this, you've got all three lines here. You've got what's called a death cross happening when one line crosses another. But for me, I like it when it is in the proper order. You want something to go from least to greatest. That's your best chance. You have the greatest chance of making money there if you're going to go long on something. So when you see your bars all the way down here, now you've got your 20-day at the very bottom. Above that, you've got the 50-day. Then you've got the 200. So that means if something's gone down far enough to where your 20-day is all the way at the bottom, it's going to come back up. Now these are moving averages, so they are constantly moving. All right, but this is the best or the safest play. Now, if you want to know if something's overextended, if you see these lines, now once it comes back up here, it crosses over the 20, hits the 50, it gets rejected. That's okay. This thing just confirmed it is now a level of resistance. So if you look back a little bit, you've got a little bounce over here, you've got rejected over here, you've got support right here, you got rejected again over here, you got rejected again over here, but now the 20-day crossed the 50 days. So now this is going to go up because you've got the bars, they are above both the 20-day and the 50-day. So it's got strength and it's got both of those beneath it. So now all that's left is for it to go up and cross the 200. Now, a lot of times for this to happen, you do want to see a good push in volume, but still, for me, this is just the safest play. I can almost 100% guarantee you that from all of my trades, when I bought, because the 20-day is below the 50-day and below the 200, it usually goes up. Now for me, most of the time I like to sell just above the 200-day because you want it to come back and retest the 200-day to show that it's got enough strength to keep pushing forward, right? It's like a back test. So for me, I usually just like to sell it right there. Call me a chicken, whatever you want to say it, but either way, it's the safest play. Now here, on this example, of course, it bull flagged. So patterns are going to be something that we talk in another video. I'm not trying to overwhelm you with too many different things at once. If you're a newbie, obviously if you're not a newbie, then you're probably not even watching this. But for the newbies out there, take it in baby steps. All right, so this is one of the plays on the minute chart. So this is like a good day trading play or pattern. Now, if you want to go into a 20-day, This chart obviously doesn't have too much information on it, but still, you know what, actually this is a really good example right here too. So you got the 20-day above, 50-day below, 200 below. Now you see how far the bars are extended from the 20-day, from the 50, from the 200. So something like this, super overextended, super overbought, it is definitely going to come back down. So it came down, it did bounce off of the 20, but you know that it's going to come back even further. All right, but these are really good for letting you know if it's going to be an area of support or resistance. You want to see something come back and test. You don't want it to always stay like super far away from these resistance levels, or I'm sorry, SMA lines and EMA lines, because it's going to come back, and usually if it comes back from being overextended, it's going to come back hard, which is what you saw here from 724 all the way down to 545 and all the way down to 427. So it's a pretty big drop. I'm sorry, 428. But either way, it came back and it hit the 50, and then it bounced off of that, which is really good. It's really strong. All right, so let's look at a different chart. Just see, maybe Apple can show us a little something better. And you know, we'll do let's do a 5-minute chart. All right, so same with this chart. If you see here, well, this was all the way at the bottom. I mean, this was really oversold, but the 20-day did come below the 50, so that would have been a good buying opportunity. And it comes back up, then the 20 is all the way at the top, so you know it's going to come back down, and it did come back down. So now here, the 20 and the 50 were about the same level. So there was a little bit of consolidation, and then it started squeezing and started making actually it looks like a triangle, like a wedge formation. And then it finally broke right out. So that's a perfect play. I mean, not a perfect play, but that's still a pretty good play. You do want to see some consolidation. So that's awesome. Now, if you're, of course, on the short end, then you would like to see the 20-day right at the top, the 50-day just below it, 200 all the way to below. So then you can short that. Me, I love shorting. I actually play more short positions than I do long positions. Even if I'm bullish on a company, I will see short opportunities and I would take that. That's why I'm the bearish bully, because I like going long, I like going short. So anyways, so that's one of the plays with these SMA lines. You definitely want to make sure that you understand how they work. They are really good levels of support. They're good levels for resistance, but they're also a good way for you to remember that if something falls back far enough, that's a perfect indication of where to buy in, right? So one that's really good is NEO. NEO comes on, it stays on top of the 20-day. You know, it'll come back, it'll touch the 20-day and it'll bounce up. If it comes down to the 50, that is perfect. Like, you can't ask for something more than that. So right here is right where it bounced off of it, and next thing you know, it's smooth sailing. It's gone. So now, of course, you're gonna wait for a little bit of a pullback, but it's not gonna come all the way back down. It does have a gap up here, so this will probably get filled on NEO. And then there's another little gap here, but I'm pretty sure by that time, the 20-day is gonna be all the way up here. So what I would do for NEO is I'd just wait for it to come back and bounce off the 20-day, which will probably be at around 58, between 57 and 58 bucks. You can quote me on that or not, I don't know. All right, so I think the next video that we're gonna touch base on is gonna be volume. Because with all of these things, there's there was one play that I actually did today with SIGL, and yeah, this was a phenomenal play, but the volume on it was so weak, which is why I didn't hold. And I'm glad I didn't, to be honest. I mean, I made my money, I was happy with that, but the volume wasn't there. So the volume's not there, why would you hold? Anyway, so the volume, that's going to be in the next video. We'll talk about that soon. Hopefully I'll have another shirt. Probably not. So we'll just take it as it goes.